Hello everyone, today is Thursday, January 9th. It's about 6:44 p.m. Eastern Standard Time, and we have another live trading video from Trader Jim. In today's video, Jim talks about how he was not successful trading or successful qualifying for a combine before the auto trader, and that the auto trader was in fact the difference for him in achieving success and not. And you all know the story. He's went on to qualify for 6 combines. So really interesting to hear his take on how the auto trader made the difference. I'll let you hear it in his words as we get into the video. Before that, I wanted to talk a little bit about perspective and chart size and a couple of ways to help you to gain a sense of direction and perspective in your charts. I have 2 charts here. One is a Super Renko 6-tick on top, and below is a 987 Heikin Ashi tick. And a 987 regular tick chart would look pretty similar. The bar spacing between the 2 vertical grid lines is 4 bars each, but what I want you to notice is the time. So here I have it lined up approximately 9:30 right here where the cursor is, and to the end of the chart on the 987 tick chart, it goes from 9:30 to 9:48, about 18 minutes, and here it goes only about 5 minutes. But to look at a bigger perspective, let's look at the whole session. Okay, on the bottom chart we can see the whole session starting where my cursor is on the left. This is the open, and to the very end of the chart here, this is the close. So this is an entire session here, and you can see the number of bars. Now on the top chart, the Super Renko 6, so on the left is the open, and then all the way over is the, again, about the same number of bars between the vertical grid lines. It only goes for about 30 minutes or so. So the number of bars on the chart on a Super Renko 6 tick is an extraordinarily small time frame, but it's good in some ways for the NASDAQ because you can capitalize on these short bursts. The moves in the 987 tick are much larger and smoothed out. So one way you might be able to get a handle on direction is either using a moving average or using 2 moving averages, and in this case I have a 20 EMA and I have the BWT Precision MA with the adaptive moving average. There's a drop down list and you can use all these different moving averages, and I have that set at the standard settings. Now this is a little slower than a 20 EMA, as you can see, but it does a good job of just showing you above and below the average. If you were long or short, most of the time you would be on the right side of the market. So you might use something like this as a guide. The 20 EMA is like the holy grail of moving averages. Always trade in the direction of the 20 EMA, and if you're using a 20 EMA, always try to enter as close to the EMA as possible. If you're going long, it means a pullback like this. If you're going short, then it means the bars coming up here like this here, or this short here. This first move, if you miss that, then the pullback right here will get you a good position. Okay, that's a short lesson on perspective and how you might use a couple of moving averages to keep you on the right side of the market. Let's have a look at Trader Jim's video for today.
9th, just taking a quick short in oil on the open here. Same template from yesterday. $500 stop and target. Could go down as low as, well, of course, 59 is in round number, so there should be some support there, but then 58.80 and 58.50. So now, as long as we stay below 59.80, the oil market is in a weaker position. Okay, here we go. First target. Stop slightly better than break even. Going to disable the shorts if they take me out, because I really expect a smooth move down. If they bounce all the way up to around 50, maybe I'll wait a little bit. All right, so they took me out here. So yeah, I'm gonna wait here. Because actually, if they are not able to reach 59.15, that in itself, without looking at anything else, is a bullish sign. So I'm not really sure what I want to do here. So if I'm not sure, I'm not going to do anything. Obviously, this template did not reach its target yet. It has a $500 target for the day, but we have plenty of time and there is no reason to push. Maybe I'll just start getting ready for the indices to open, see what I can do with the NASDAQ. Okay, so maybe they just popped it up. This high is still below this high. So we're still stepping down, as you can see. So this is still bearish. So giving this another shot. Sorry guys, walked away, so I missed it. Yeah, so it worked out beautifully. Here we go. Daily target here. Hit happened right before paid session open for the indices, which is great. This way I can just focus on that. Here is the template, $500 stop and target, trading 2 contracts. So yeah, they just kind of fooled me here a little bit. They came back up, but this high, as I said before, was still below all of these highs. So we have this step down scenario. So I felt as long as they can't break the 72, 73, between like say 70 and 73, they would just go and try and test the 15. They came close. No, not really though. They should still, again, I say if they cannot test the 59.15, it's actually bullish. So we'll see how oil works out later on. So I'm done with this though. Let's disable just in case. Well, still waiting for a pullback here. Just they're too high. I would love to have a pullback to around 89.90. Definitely missed some good long trades already, but I just need to see how they behave at 89.90. And if they live without me to 9,035, so be it. Okay, so as I said, waiting for the 90, they got as low as 90 to 50, and I'm not sure if this is good enough. I really, when it comes like, when it's close but not quiet, that's when I don't know. I would love for them to actually see them touching the 90 and then recover from the 90 to take a long trade. But they might not give it to me. It was like, I don't know. But if I'm not sure, I'm just going to wait. Love for them to actually get into 89.90. This 92 business, not quiet. Oil, by the way, is at 58.80, so oil is doing everything it's supposed to do. Patience, 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 patience. Well, it looks like they might be leaving without me. I just needed to see the 90. They didn't give it to me so far, just 92. And I was a bit apprehensive after just seeing the 92. So if they leave without me, I'm going to have to wait for something else. Otherwise, I still want to see the 89.90 and then try and take a long. It took them all this time to come and test the 90, the 89.90. Wow, 3 hours later. Oh well, here we are, finally. Now I'm ready to click on longs. And as soon as the auto trader confirms, I am going to take a long. They're going to spike it, they might kind of dig into it, but they're not done with the upside. So this is just a way to get everyone out. All right, so finally here is the long, much lower than the 19, and I'll talk about it a bit later. That's one of the main reasons what turned things around for me, the idea of a confirmation of a price. So not just going long because I'm waiting for 89.90, but then waiting for a confirmation, because no confirmation, 40 points later, no confirmation came until just here. And that's what turned things around for me, because the auto trader keeps me from taking trades that are not good trades. And look at this. That's the difference. Here is target one. Now they're going to just keep on climbing. And that is the amazing thing about this software. In the past, I would simply buy the 90 and for sure would have been stopped out. Look at this. Look at this. And target hit. I'm gonna see if I can get a bit of a retracement. They might not even give me that. Should I just click longs and keep going? Need a bit of a retracement here. Okay, here's the other long. Okay, first target achieved there. We're just a few ticks away from daily target there. Come on. Don't come all the way back now. Keep going, a few more ticks. And here it is, daily target hit. Absolutely marvelous here. This is auto trader at its best. After 1 o'clock. Check this out. I mean, and this is something that's really worth, I think, talking about a few minutes. Let's put this away. Let's rewind the tape, shall we? So around 12:20 was it, I think, right? We hit 89.90. That's when I turned the longs on. You can rewind the video and you can see around 89.90 I turned the longs on. And you know, without the auto trader, the way it used to be for me, I would identify a level and then just take a long. Now, if I have done that, it would have been a losing trade for sure. Now, even though the longs were clicked, the auto trader did not take a long anywhere here. As the price kept dropping, there were no long trades. This does not qualify. No qualified long trades. 40 points below the number that I identified as important. So obviously I was way wrong on the 90. But long after, look at the low, around 52. And here is the long, around 59. So this was the first qualified long trade. And this first qualified long trade became a winner. And actually here, I disabled the longs because the auto trader would have just taken another long on a blue bar that closed up. Would have taken a long here at 71 as opposed to, because I unclicked the longs, it took a long here at 78. So I would have achieved my profit target much faster. So that is the, I would say, the main difference. That is the reason why before the auto trader I was not able to qualify for a single funded account. And after getting it and after putting in the work, if you've been watching my videos, you know it took me about 3 months to get going before about 3 months of back testing and learning how the auto trader works to then purchase my first combine. My first combine after purchasing the auto trader. Because I did try combines before, I was just never able to get qualified for a funded account. So that's the difference, and that's it for me for today. But I think this was worth illustrating. I think I showed everything, right? All right. See everyone tomorrow.